Every trader wants to be consistently profitable, but how many traders are consistent? Do you have a consistent approach to the way you prepare for your session? Do you have a consistent plan you follow through when working out the context for placing your trades? In this video, we're going to go through my process that I use to determine context, and I hope you're going to find that valuable because it might inspire you to come up with your own process. So I've written down the structure that I follow every time I do a market report. Now, I don't write this on the market report because, as we're going to find, when you talk about trades, you're actually talking about all of this at the same time. And this makes it really difficult to learn trading. So I'm going to go through this first, and then I'm going to show how this applies to the market report. This is exactly how I trade, which means that because I trade 2 to 3 sessions a day, and I write market reports on the weekend, and I live stream, I need to follow the same process each time. Otherwise, it would be too exhausting to create a new one. So I will go through time frames, monthly, weekly, daily. I look at 3 areas: momentum, magnets, and measured move. Basically, who's in control, where I think we're going, and where people will be taking profit. Because I use Al Brooks' style of price action trading, I look at, are we always in or are we in a trading range? Because I'm a price action trader, I look at the market cycle, spikes, channels, legs, trading range. I'll look at different market structures, doubles, triples, double tops, double bottoms, wedge tops, wedge bottoms, and all the combinations of those. For me, the most important part of trading, and the part that drives all of the other work I do, is about breakouts and failed breakouts. A lot of my videos about spikes, spike high one, spike low one, breakout, failed breakout. I then do my best to look at orders. So stop order entries, limit order entries, potential targets. Then I look at risk, where are their stops, success and failure. Then for next week, I look at probability, risk return. We're on the monthly momentum. Momentum is obviously to the upside. We're above both the 20 and the 200 bar moving averages. And we broke out of the prior all-time high back here. We also broke out of the all-time high from May last year. So it's a breakout. This breakout's got a gap. Where are the magnets? Well, big round numbers are always a reasonable place to take a look at. There's 8,000. So there's 9,000. 8,000 is down here. This tight trading range was between 400 and 500 points. So I often look at these measured moves, magnets and momentum all together. So if I just group that whole range and project it up, you can see that takes us to about 8,800. Are we always in long? Yeah, we're always in long. We've got a bull breakout. We're breaking far above a prior spike. Other traders will see this as a bull channel and say, well, I think we're coming out of the top of the channel. One of the things to realize about drawing lines on the chart is that they don't actually exist. And so they're always estimates. You know, do you use the tails? Do you use the bodies? Most important thing to realize is it's a bull channel and I don't want to sell up here. So it's more important in a bull channel, I think, to use the trend line to remind you to buy. This was a tight trading range and this was a bull breakout. Now I'm here talking about always in a trading range. If I draw a line there and I draw a line here, what do you notice? There was no buy signal above this trading range until all the way up here. If a trader wanted to buy somewhere in here, they had to buy this bar. So it's a spike, 1 leg pullback, 2 leg pullback, then here is a high to buy. So all pullbacks are trading ranges on smaller time frames. So we might use a measured move of the whole pullback there. Surprise, surprise, that gets us to 9,000. We've been talking about that for the last few months. Or you can take the lower high and that pullback, that'll get you to 8,900. I'm just using the bulk of this range here for the first target. And what do you know? If you take a range that is most of these bars, that gets us to about 8,700. So you've got momentum, magnets, measured moves. We've talked about always in. We've talked about trading range. Let's talk about the market cycle. This is a bull channel. We know statistically bull channels are bear flags. That's because 75% of the time they turn into a trading range. Only a 25% chance we get a bull breakout above. But what I do notice about this breakout is if I put one line at the moving average and I project it up, we're actually not breaking out of the top of this trading range yet. So DAX has more potential to overshoot and pull back, whereas on FTSE, I think we're still good. But it all depends on the follow through for this month. Will this month be another bull bar? Traders want to buy a breakout and follow through. They buy up there, stop probably at the low of the bar, and a one-to-one target will take them up to 9,100. The approach I use for targets is to do something like this. My target is 9,000. The stop is down here. So now I know somewhere between the low of this bar and here, I can get a really good risk reward for that second leg up. This is a spike and a pullback and a channel. You can see we tried to test this channel, but unable. Now we've got a new spike, and this will be a channel on a lower time frame. If this is a tight trading range coming late in a channel, there's a good chance this will become a final flag. So therefore you put a line between that and say, okay, so the magnet's probably 8,200 as well. We talked about trend lines, channel lines, gaps. We've got an open breakout gap. Sometimes traders will use the middle of that gap as the measured move target. And what do you know? If I put that line in the middle of that gap, it projects up to 9,000 as well. A lot of reasons to go to 9,000. Now, magnets don't tell us how we're going to get there. It just tells us that there's a good chance we are going to get there. The market needs uncertainty for traders to place trades, and therefore that's why we need to get to the measured move so those traders can exit and uncertainty can be restored. Pullback distance, well, for the bulls, this was just a 50% pullback, so everything healthy. 50% pullback from this leg would be just testing the breakout point, so that's healthy. Are there double tops, triple tops? Well, I thought that was an attempt at a wedge. Can this be a climax, come back down and form a lower high and a right shoulder? Yeah, it could, but we're going to cover orders soon, and we're going to see that until a signal bar turns up, that's pretty unlikely. Tests, well, this bar tested the breakout point once, so it probably needs to test it again over the next couple of months to keep that gap open. If you're a stop order trader, well, there's a bull spike, 3 consecutive bull bars, so your target's up there at about 8,900. If you saw that spike and you're waiting for pullback to get long, your high one buy is above this bar here. Pullback, maybe you don't buy the outside bar, you wait, that's a high 2. Your target's right up at 9,000, and that's where I think we are at the moment. That's the credible long, and we've been talking about that for a while now, and that will take us up to basically 9,000 or just above. Any other stop entries? This is a trading range which has a measured move up at 8,900, but I would usually look at the closest trading range. That's why we looked at this range or this range, and they're all around, between 9,000 and 9,050, which is where I think we're going to go. Limit order trades, no. Tight trading range above the moving average in a bull trend. This is a great place to buy. I was long through here. I like to buy pullbacks to the moving average in what I think is a channel. It's quite a safe area. Usually if it fails, you get a chance to minimize that loss. I quite like that trade. Targets we've talked through. Risk, well, you've got a lot of risk now. If you're buying up here, where's your stop? Well, stop's probably at the low of that bar. And so that means to buy above this bar, you want 9,100. Like I said before, I think it would be better to put your target at 9,000 and then buy for that target. So at the moment, always in long, better to be long or flat and waiting on follow through on the monthly chart. Let's take a look at the weekly chart. So same process again. A lot of this we've already covered on a higher time frame, so I won't repeat that, but now you've at least got a process to follow. Momentum, we've got a bull breakout above this tight trading range. This was a spike, a pullback, and a channel. We broke out of this pullback. Pullback is a trading range on a lower time frame. Maybe the measured move is there, there, or there. All of these targets are up here, and I think all of them are going to get hit. We broke out, created a gap. We've tested this breakout point and went up. I wouldn't be surprised if we test it again. You can see there was a really good looking double bottom attempt, but a lot of traders waited for 3 bars before buying or bought during this bar. So this is the breakout bar. The breakout bar gets the minimum amount of follow through. That was a terrible low one sell. That's actually a low one buy because a low one only exists in something that's bearish or a trading range. And this is a bull spike. So we're in a new spike. Here's a pullback. And then here is the new channel. So this is likely to form some kind of a channel going up. We broke out of a trading range. Can this be a big bear bar next week and come all the way back in? Bears would like it, but it's not a great looking sell signal. I think there's probably going to be buyers below here and near the moving average. So, this bar would need to fail and get followed through, probably lower high. This trend line is also very steep. So the first attempt to reverse, it's likely to fail. That was an attempt at a double top that failed or a triple top. You can just measure these boundaries, and that's getting your measured move up to 8.8, which is what we talked about on the monthly chart. We're in a breakout. Stop orders, well, in a tight trading range, it's very difficult to take stop orders, and traders are waiting for a breakout. You've got consecutive bull bars above the moving average here. This wasn't great follow through. This is good follow through. So it's strong, but it's not that strong. And that means it's more likely to behave like a channel. When I'm looking at a channel, I usually use the moving average and the highs and, what do you know, right to the midpoint. So I think this channel line is going to be the best place to take orders, at least on the weekly chart. Can you sell on a limit order? No, this is a bull breakout. No good sell signal. That was a bear trap. So traders bought that. And I think they got 1-to-1. So you buy there and their target is 8,800, which we've been talking about before. That was a great buy. And I think that's where the stop needs to be. Can you have bought above this bar? Well, if you're buying above that bar, then what you're saying is this is your spike going up to above 9,000. The difficulty is once you've broken out of a trading range, there's a lot of traders using measured moves. And so this is a breakout point. I think a better strategy is to say, well, what range did we break out of? If I buy that bar, I don't want to come back in this range. So I'm buying above there with my stop actually in space down here. I don't want it to come back. And that would give you a 1-to-1 of 9,000. I think that would be an easier trade to set up and manage. If it comes back in here, then stop getting long. So always in long, sideways to up next week, and we're in a bull channel. Let's have a look at the 24-hour chart. So a little bit similar to DAX, and we're just going to follow the same process that we did before. We've got 3 pushes up, very strong. So if I'm a swing trader looking for momentum, here's a spike and a pullback. Here's a new high. Here's a higher low. Here's a new high. So momentum's to the upside, higher highs, higher lows. The magnets we talked about before. Now everyone measures this and says, oh, look, it's a wedge you need to short. This is not a sell signal to get short. It's a sell signal to take profits if you think it's reasonable. At the moment, I wouldn't be selling below a bear inside bar. I'd be flat waiting for a pullback. Where can you pull back into? 50% of that range is this bull bar here or somewhere here. I think we get into the low of this range, there will be buyers betting they can buy here and the moving average and make money. That's a very good trader's equation. Always in long. Bears tried to close the gap here, but you can see there's a small gap between the body of this bear bar and this body, and that is what we call a negative gap, which means bears were unable to turn this into exhaustion. So it's a new breakout gap. Rather than put the line there, as I said before, I think better to draw the line there or there and look for pullbacks to buy. Doubles, triples, well, we broke out of a range, which we spoke about before. Huge gap here. So sometimes you put the measured move in the gap, and that's taking us to 8,800 as well. So 8,800 just keeps popping up. So that's a good sign that traders are going to go for there. We're testing this high once. Here we tested it once, twice, rocketed up. So we might need a second test of this earlier in the week. This is a stop entry buy, but it's leg 3. So you can only buy that if you're willing to expect a pullback. Otherwise, you're long relying on your stop or you're waiting for a pullback. Can you sell here? No, not a good sell signal for a limit order trade. Really risky to do this stuff. Selling here, selling higher to make money. There's just easier ways to make money. Basically, you do the exact opposite. Wait for the breakout and the pullback, and then you get long here and here. Here's a spike. You wait for a bear bar to trigger. You wait for a bear bar to trigger. You wait for it to fail, and then you buy above something bullish. So you would be long in all these green squares, and your pullback doesn't worry at all. And now you're sitting in lots of profit. So on the daily chart, that's a much better approach. As I said, always in long, lots of bull bars up. This channel is tight and we haven't had a trend line break as yet. So in order to short, you'd need to see this trend line broken and a test. Highest probability is sideways to up. Well, thanks very much for watching. I hope you found that valuable. In this video, we talked about context and bringing a process to understanding the chart in front of us. By having a consistent process, this is going to start to run automatically when you trade. And that means there's part of your brain that doesn't have to think on that and can just focus on taking better trades. I hope you get a chance to apply this next week in your trading, and please let me know in the comments below if you found it valuable. Thanks very much, and I'll see you next weekend.